Welcome to AFO Wealth Management Forward, a podcast powered by Arrowroot Family Office that's at the intersection of accounting, wealth management, behavioral finance, technology, and entrepreneurship. We help accounting firms and financial advisors grow their practice by going beyond the numbers as we learn from industry leaders and subject matter experts to discover the secret to their success. A podcast that highlights everything from the transformative power of AI to embracing the human-first approach of behavioral finance to help you understand the psychological and emotional relationships to money and meaning. Here is your host, Rory Henry, Director at Arrowroot Family Office and author of Holistic Guide to Wealth Management.
All right. Hello, everyone. I'm excited to welcome back our guest today, who's joining me for a third time. He's an internationally recognized voice, a Forbes contributor, CPA, researcher, and author. He serves on the advisory board of the Wall Street Blockchain Alliance and is a professor at Lehman College. He's helping practitioners and really the general public make sense of emerging technologies like crypto, blockchain, and AI. So without further ado, let me welcome my friend, Dr. Stein Smith. Sean, welcome to the show.
Thank you so much, Rory.
Yes, buddy.
Good to be here.
Yeah, I'm glad to have you on. I know we have a lot to talk about. I know when we were speaking, you want to talk about AI and advisory, but I want to kind of have you give our audience a little bit of base here because there's a convergence going on, and you are sitting on the front lines here of blockchain and AI. You wrote a book on blockchain, AI, and financial services. So can you kind of talk about this convergence and how they complement each other?
Yeah, sure thing. So probably the two big things that I've been following most of all, Rory, is that one, the whole blockchain conversation has really moved off the back burner and onto the front burner, right? During the last 2, 3, 4, 5 years. And that now pretty much every major, TradFi firm out there, be it banks, asset managers, plan managers, wealth advisory firms, are entering into this on-chain space via products and services from big household names like Chase. We have BlackRock, obviously. We have SoFi now is actually reinstituting their option for consumers to then trade pairs, Bitcoin dollars, Ether dollars. And then also AI is this huge force out here, right? AI burst into the mainstream conversation back at the end of 2022. And it really has been just going nonstop ever since. AI has been integrated into every aspect of payments, banking, trading, wealth management, and it is really changing every aspect of the banking, finance, and anything to do with, I think, money is being influenced by AI. And there are some pros and cons there too. But ultimately, right, what I would say there, Rory, is that the true promise of blockchain and on-chain payments is instantaneous payments. They're traceable, transparent, they cost less, they're just better, faster, cheaper. And in order for that promise to actually become reality, AI is going to play a major part in that to make sure that the analytics are there, that the processing is there, and that the anti-fraud efforts are actually able to keep pace alongside blockchain and on-chain payments. So it's really interesting to be here. And I know that that depending on the day and the audience, the term front lines is more or I think less accurate, but it's always exciting.
Yeah. Well, I mean, the blockchain is that trust and transparency, and then the AI drives, speed and efficiency. And I know you've talked about data is really the new asset here. Traditionally, for folks that are accountants or in the accounting space, they're trained on measuring numbers, reconciling books, producing reports. But we're seeing this shift because data is like gold, where we can analyze it, leverage it, and be able to provide insights and use that to improve the value of our clients' businesses and their personal financial planning and all the things that come in with financial services.
Yes, I mean, the true sort of oil that's powering any number of these applications, be they at larger institutions or sort of AI native, crypto native firms, is having access to high quality, trustworthy information. And that for anybody who is in my world as a CPA is having to sort of reorient themselves as to how this huge influx of data, right? Because AI creates data nonstop. There's huge volumes of data, and all of that has to be analyzed. And more importantly, Rory, it has to be parsed into terms that entrepreneurs, that our clients can actually use, right? Because data is
Yeah.
great, but by itself, if I can't translate
Communicate.
that into terms that my clients can understand, then it's not as useful uh, as it otherwise might be.
Yeah. I just heard you. I was doing some research here. You had Kevin Matz on, the president of the NYSCPA, and he talked about really the importance of multidisciplinary skills, blending those hard skills with the soft skills. And I think that's what we're talking about, being able to communicate effectively. I talk about this in the human first approach, behavioral finance, and really understanding the human behind the numbers. Can you really talk about that importance? Let's talk about those soft skills and
Sure.
being able to communicate effectively with our clients and our
Absolutely.
and our colleagues, right?
Yes. Yeah, hopefully, right?
Yeah, yeah.
So I'm going to push back just a tiny bit there, Rory. That
Okay.
the term soft skill,
Yes, I agree.
I don't really like that term,
I
and
don't
I
either.
know that, and I know that I was actually educated last week by a colleague of mine that the phrase "soft and hard skills" comes from the military,
Yeah.
but but for our audience here,
Well, soft skills are hard, hard skills are soft.
exactly. But it isn't so much soft skills; it's honestly business skills,
Yeah.
right? Right? How do I go into a meeting, talk to a client, and basically walk them through how all of these great tools, be it AI agents, be
Yeah.
it blockchain, be it crypto, how do I talk to them? How do I meet them? That's
Where
where
that.
in
Yeah.
terms of how to use these tools, because everybody at this point, our audience, understands kind of sort of what the blockchain is, what Bitcoin is, and how AI works. But then, okay, how do we take that to the enterprise level? How do we actually take these tools, which are incredibly powerful tools,
Yeah.
but powerful tools, if you don't know how to use them correctly, can do a lot of damage. They can make a lot of mess. So how do we understand how the tools work, talk to our clients in a language and in a manner that helps them, and then three, integrate it into their businesses as they currently are, then ultimately have them harness those tools to make them to allow them to make better business
Good
choices. And
decisions.
that's super important because it's awfully easy to be lost in sort of the one, the headlines, and
Yeah.
two, all of the terminology, right, around AI. We have large language models. We have natural language processing. We have uh, machine
Yeah.
learning engines. We have blockchain. We have private blockchains, public blockchains. We have DeFi. We have staking. We have all kinds of terminology out there. So how do you figure out on our end which terms, topics, and themes are actually most important? And then how
Yeah.
do we hone in on those and then actually figure out of this whole ecosystem which tools and topics are actually going to be useful today for our clients to want to get educated on and to integrate them into their business. And that's really
Yeah.
the sort of point at which the whole accounting finance ecosystem is
Yeah.
at. That the tools are here, we are using them, but then how do we
Yeah.
make sure that as we use them, we are using them to maximize them, both
Yeah.
internally, hopefully, and externally.
Yeah. Well, let's speak about how we can utilize these tools. I know you talked about AI advisory, and you have pros and cons. So if people are kind of approaching this advisor world, and moving, always talk about compliance and to advisor role, to advisory roles here. Let's talk about some pros and cons on how people can be approaching this, in a methodical and authentic way.
I think the best sort of parallel here is to highlight that any of these tools, right, be it AI, right? AI is sort of our sort of point right here.
Yeah.
And AI, how do we actually integrate it? Well, AI in and of itself is not any different from a institutional level as opposed to any other tool, right? Meaning, how do we figure out which tool works for us, right? How do we vet the external vendor to partner with? How do we integrate it into our firms? And then how do we do so in a way that isn't accidentally changing our risk profile?
Yeah.
So then uh, adding on to that, the pros and cons, right? AI, it is easy to use, it's intuitive, and it gives you, on the surface, entirely accurate answers that
Yeah.
are well reasoned,
Right.
comprehensive, and all the rest. But there have been multiple cases. I know there was a big four firm which I won't name here that was recently in some
Yeah.
hot water, right?
Yeah.
Right, because of some content produced by the firm that turns out to be have that turns out that was entirely produced by AI and had not been fact checked.
Yeah.
And so the pros are that it's easy to use, it's intuitive. I can save time on document analytics,
Mhm.
doing engagement letters, doing analytics inside the firm for our purposes and externally. I can analyze data for clients and map out 2, 3, 4, 5, 12 different options for them instantaneously. Now, on the exact opposite side of all of those attributes are the risks, right? That one, and I cannot highlight this enough, Rory, you
Mhm.
cannot put client data
Yeah.
into a public facing large language model. Now, if your firm has their own in-house model, uh, if your client has their own AI agent built out, that's fine.
Yeah.
Or even Copilot has those enterprise options that are available to you to help keep data safe.
Yeah.
But you cannot put confidential data, personal data into these models. And then two, you aren't able to blindly trust any AI output. All of us, I'm sure, have heard the term black box,
Yeah.
right? Via automation, be it data analytics, business intelligence, other areas like that. That I can't just input the AI into my current process and just kind of trust it, right?
Yeah.
Can't do that. There has to be a opportunity for human oversight, be it fact checking, be it just you going over the output to make sure that as it's going out the door to your clients, that it's answering the questions that actually were asked, and that hopefully it's accurate. And so there is that uh, con side too. That if we all trust AI, and obviously trusting AI brings up images of the Matrix, the Terminator, but if we're trusting AI, right, and pretty much everybody is trusting it more and more, how does that change how our clients perceive us?
Yeah.
That if all of our sort of baseline tasks, be it doing analytics, doing modeling, doing option planning for them, if AI is doing more and more of that, and all of us are doing that, that turns those services into a commodity.
Commodity.
And so then, what happens to a industry as it becomes a commodity? Margins go down. So then,
Yes.
how do we deal with that? Again, that goes back to that business aspect of it, dealing with clients, talking to clients, and then being able to be that point of contact to add that value in terms
Yeah.
of translating this AI output into actionable business insights. And I do think the pros and cons go hand in hand. And right now, there is sort of a adjustment period underway in terms of how best to address that.
Yeah. I mean, we've gone obviously from a profession on the accounting side where we build because of transactions, and as Ron Baker talks, and I champion Wells, we're moving to ones of transformation, and AI and blockchain is allowing us to do that, to provide transformations for our business owner clients, for the personal financial planning clients. That's going to set us apart from the commoditized work that's going on because of technology. So you're right. It is a mindset shift for folks out there to be able to really provide value and outcomes that are meaningful for clients.
Yeah, and the this whole idea of the uh, billable hour, right?
Yeah.
And I think of that because you mentioned Ron Baker, who for decades has been out there saying that we as CPAs have to pivot away from the billable hour to more of a value-based building model, and all of that on paper always sounded good.
Mhm.
And now we actually have the tools to do so, to
Yeah.
automate or to augment those base level tasks that one aren't billable, that two aren't interesting for our staff to do internally, and three our clients don't want to pay for or even hear about. And so
Yeah.
then now we have the tools that all of us have been sort of on the hunt for that allow us to become that trusted business advisor, as opposed to always being the compliance people,
Right.
backwards looking focus.
Yeah. And look, they're seeing tools out there, AI meeting tools, that are really understanding the sentiment. So when you're be able to aggregate all the data, business side, personal financial planning side, and then listen to those client conversations, you're really able to mine not only the hard financial debits and credits, right, but also where people are at emotionally and psychologically. As we talk about in behavioral finance and our human first approach, the AI is going to be able to analyze and all those pieces of information as well as the sentiment of that client, and you'll be able to then provide, personalized and impactful advice to them.
Yes, and what I would add there is that that ability to do analytics on the sentiment or on the words that aren't said during meetings or during conversations is going to become even more important.
Yeah,
And I really highlight that fact because right now there's more information, more advice out there than ever previously.
yeah,
There's TikTok, there's Reddit, there's Instagram. All of these people advocating for
I know,
certain investments
I
for,
know.
and I won't name names here, but there are certain plans, investments, and gurus
Yeah,
out there that have this information. And so I do think that dealing with client FOMO is going to be more and more important,
right.
because even if they aren't telling us directly, if they're doing things or they are coming to us with certain ideas, then it's up to us to be able to analyze those,
Yeah.
understand them, and to help our clients be navigated towards more productive ideas,
Right.
as
That's the
opposed to just
psychological battleground we're on, right? We're up against
exactly.
all these social media influencers. That's
Yep.
why it's the importance of our credentials of being a fiduciary, right? Of being a CPA and that trusted advisor. So people can, go to you and trust that you're able to provide them sound advice.
Yes, and I do know that the whole conversation around the value of a CPA license has been going on
Right.
for a while. There's the 120 and the 150 and all that. And, that's a whole other conversation, right? But ultimately, I do think that the gold standard of being a CPA is that anybody, be it a client, be it a person on the street, understands what that means
Yeah.
in terms of your expertise, how you analyze things, and then how you try to help businesses do better. And I do think more and more, as there's more people out there talking, being a source of objective, reasonable, business first, human first
Yeah.
expertise and knowledge is going to be more valuable, because it is going to be harder and harder for the average person, be it our current clients or clients in the future or our employees, to understand what sources of data are actually
Yeah.
objective, correct, and able to be used.
Yeah. And what's truth, right?
But
So exactly, in this wild world we're in. Well, I know Bitcoin gets a lot of attention, and you recently talked about the legislation that was passed, and Bitcoin obviously gets a lot of the headlines, but you argue that blockchain functionality is the real story here. Can you kind of expand on that?
yeah, sure thing. So obviously, Bitcoin, it's the headliner, right? It's
Yeah.
the OG crypto. It's been the headliner forever. But in terms of actually being used by enterprises and clients, the real upshot is now we have better blockchains, we have more blockchains, and we have blockchains that have the institutional backstops and institutional safeguards, that our clients want and ultimately need. That if I have a client who comes to me and wants to put some of their business on chain or have payments come to them on chain, they
Yeah.
probably aren't going to want to use the Bitcoin blockchain or the Ethereum blockchain. And that as blockchains get better integrated into existing
Interesting.
software tools and
Yeah.
existing asset management
Like JP
platforms,
Morgan had, I think you stated JP Morgan has their own blockchain, right? And they're
yep.
doing payments
If JP
with
Morgan
that
has
tool.
had their own chain, and
Yeah.
they've had it named, I think, four
Onyx,
different.
right?
It had been Onyx, then it
Yeah.
has some other name, and it
Yeah.
has some third name now. So they're constantly changing
Right.
their internal name, right? But yeah, even Chase,
Yeah.
whose CEO Jamie Dimon famously hates Bitcoin.
Yeah.
But his bank, his institution has been actively building out their own in-house blockchain, their private blockchain, and they even have now their own, I believe they call it the JPM demand
Hmm.
deposit token, basically their own stablecoin to help
Yeah.
them better process payments internally in between clients. So as that happens, the upshot there is that trust in blockchain data is only going to increase. And that with trust increasing, we do have some good policy tailwinds out here.
Yeah.
That is going to mean that more of our clients are going to be either directly or indirectly exposed to on chain payments or on chain data of any kind.
Yeah. And let's talk about the adoption here because I think stablecoin is another big piece of this. And for wider adoption, commercial use, and to get this at scale, we need these institutions to get on board. So can you kind of talk about stablecoins and the adoption here?
Sure. How much time do we have, Rory?
Yeah.
2 hours, 3 hours? No.
Yeah.
But so basically, right, just for the audience who might not be up to the minute here,
Yeah.
is that if I'm talking about a privately issued stablecoin, I'm talking about a token or a coin that's issued by a private entity
That's
that
backed
is
in.
backed and pegged on a one-to-one basis in the vast majority of cases by the US dollar.
Mhm.
So we have that crypto killer app that AI has had with ChatGPT. That it's a instrument that, okay, I can understand how this works. It's a coin or a token on the one hand, so it has those upshots of being traceable, transparent, faster, and cheaper for payment purposes. But it also has that backstop of the US dollar, of being sort of pegged, and it trades for most of these stable coins, the big ones that are used trade in a very tight range on that one-to-one peg.
Yeah.
So that makes it a much easier on ramp for institutions and individuals to actually understand how this stuff works on the everyday, and to two, for our conversation to actually start using it. And I also always like pointing out that household names, Visa and MasterCard, have both been able to process transactions on their blockchains
Hmm.
in various cryptos, including stablecoins, for the last, at this point, 3 to 4 years.
Yeah.
And they've both recently publicly announced their build out and their expansion of these on chain payment services. And PayPal, the everyday app that everybody has on their phone, they have been in this space since 2014. And over the last 12 months, they have rolled out more services to allow
Yeah.
both individuals and merchants to buy, sell, and hold crypto in their PayPal wallets, including their own PayPal stablecoin. So, in
Yeah.
terms of the usage and the adoption of crypto, and by extension, blockchain in the mainstream, I'd say stablecoins are the obvious sort of target for
Hmm.
policy or for advisors to have those conversations with our clients on.
Yeah, is this why there's more excitement during this bull run in 2025 as opposed to maybe the 2021? Because we are seeing, adoption driven by, institutions and then policymakers, regulators, and are getting on board here. Is this why it seems maybe different than earlier bull runs here? This isn't investment advice, once again.
Of course not. Yeah. No. And what I'd say there, Rory, is that it's always dangerous to say that it's different this time, right?
Right,
But
right, right.
and that I'm probably going to aggravate some corners of the Bitcoin maximalist area
Yes,
now,
yes.
but that I've been an advocate that in order to get mainstream adoption, regulation was always going to be needed, right?
Yeah.
And that the past bull runs of 2017 and 2021 were driven in large part by individuals who were
Hmm.
buying Bitcoin hoping that it would go up in price, right? That was it. And obviously, in terms of policy, we had some headwinds out there. We had Operation Choke Point
Yeah.
2.0. We had all kinds of things out there, right? We had lawsuits and fines. FTX didn't help at all either. But
Right.
and so now in 2024 and 2025, as a result of some changes in policy, right?
Yeah. The Genius
Uh,
Act, right?
yep, absolutely. There has been sort of a opening of the door for institutions to get into this space, and I do think that the approval of the Bitcoin spot ETF by
Yeah.
BlackRock in January of 2024, that was sort of the opening bell. And ever since then, there have been more institutions, be it Chase, BOA, Citi, we have SoFi, Stripe, all of these household names implementing, building out, and expanding their offerings around blockchain and for on-chain assets, be it Bitcoin or otherwise. That has driven this current rally because
Yeah.
one, the institutions have obviously large appetites for these assets and these
Hmm.
products, and two, more importantly, going back to your points, that endorsement of crypto and Bitcoin by these institutions who I bank at, my parents have banked at,
Right.
my friends bank at, they're all getting into crypto. So if everyone's getting into it, and all these banks, they have the customer service, they have the insurance, they have all of those consumer safeguards around these products. And so that has, I think, given the recent rally more legs and has also kept the price of Bitcoin and other assets from, dropping as dramatically as happened during previous bull runs, driven primarily by individuals. So I do think it is a bit different this time because
Hmm.
now, for the first time in the history of crypto, which only goes back to 2015, right? In terms of the sort of public facing market history of it, we now for the first time have the banks and other institutions, we have asset managers, we have payment processors who are integrating these assets into their platforms. But I will say that it's been very interesting to watch because I've been involved in this space since the end of
Yeah.
2015. It's been interesting to watch, Rory, how the idea of Bitcoin as this sort of decentralized, outside of
Right.
the scope of regulators and banks, we're going to disintermediate banks and government in a short decade. It has gone the whole other way, and now we
Right.
Chase having their own crypto products. We have BlackRock having their biggest ETF being the Bitcoin uh, uh, ETF, and we have talks about the federal government, converting their current holdings into a Bitcoin stockpile. It's been
Yep.
very interesting to watch, but I do think having that as part of the current bull market has helped it sort of go longer and have more, I think, strength.
Yeah, and I know you wanted to talk about the implications here of Bitcoin in the retirement ecosystem into 401ks and 403bs. Can you kind of expand on that for our audience?
Yeah, sure thing.
Yeah.
So in August of 2025, there was a order signed out uh, of the White House,
Hmm.
which basically said that going forward, and it was in coordination with the Department of Labor,
Yeah.
and the order said that going forward, plan managers, and that's the 401k and 403b plan managers, did not have to exclude Bitcoin linked products going forward. Now the order, um, it came out towards the end of August, so it has not gotten the coverage that I honestly believe it should. But if you actually put that into uh, scope, right? If we talk about companies taking Bitcoin for payments, that's fine. But the 401k market and the
Oh,
403b market, that's a $12 trillion
trillion.
marketplace
Yeah.
just here in the US. And so if we have plan managers having the option, right, there is
Right.
no mandate, there is no order. They have the option to now start to integrate and to onboard those products into their mainstream offerings. That is a major step forward and a major leg up in terms of getting investors exposed to Bitcoin via, again, a household name that has all the safeguards, insurance, and
Yeah.
investor coverage that these newer investors are going to need. So I do think that's a major step forward in terms of one, getting the institutions more on board, getting more educational content out there, and three, sort of mainstreaming crypto and Bitcoin. As honestly, to me, Bitcoin is an asset class by itself. I've been arguing this probably, if you go back to the earlier episodes,
Yeah,
I've
right.
been arguing that since then, Rory. But that Bitcoin, it's an asset class, right? There are other tokens, other coins that have a better function as a medium of doing business. But Bitcoin, it's an asset class. And if we have plan managers that have the option to add them into their plan offerings, that's going to increase the education, increase the transparency, and increase the endorsement of these
Endorsement.
products for customers that are interested in them.
Yeah. All right, I want to kind of wrap up here, but I wanted to get your commentary on the recent Sam Altman. I don't know if you saw the Sam Altman Brad Gerstner podcast, where he asked him, "How can a company with 13 billion in revenue, make a 1.4 trillion dollar spend commitment?" Can you kind of talk about that? I mean, these data centers and AI and potential for cannibalization here. I mean, these are some big numbers. I'd love to get your commentary on that and what's going on, with OpenAI here.
Yeah, so I think that I should issue a kind of caveat here
Disclaimer.
that anything around Altman and his company is always going to be subject to change in a very
Yeah.
fast way, right? And there has been quite a bit talked about recently, and there are two aspects to this, Rory. One is there is more and more conversation as to how real is this AI train, right?
Yeah.
How real is it? Are these firms actually making money? Because revenue is one thing,
Right.
profit's an entirely different animal.
Right.
And the answer is that these AI firms right now, the vast majority of them aren't turning a profit on their core operations, right? That's just how it is. And it's a fast growing space. It is transformative, but it is not profitable on the whole as of yet. And there's been a ton of conversation with Altman at the center of it, which I kind of think he likes,
He does.
in terms of getting government guarantees, government partnerships for building out data centers, for how to source the energy, for all these
Yeah.
data centers, for how to source the water, for all of these huge, huge data centers. I do think we are entering the phase here where a few of the numbers out here, a few of the forecasts might be a little bit getting a little bubbly.
Yeah.
Um, I would not say that it's a bubble, but I think we are starting to froth a bit in
Yeah.
terms of the forecast, in terms of the expectations that a few of these AI firms have, in terms of the spend, in terms of how they're going to get that money to build out these data centers to fuel their growth. And I saw a note come out from a bank recently, and I forget which bank it was, but their estimates were that for those growth projections and the revenue and the profits to actually hit, it was going to take a $650 billion revenue run rate annually going out for as far as their models could model out.
Yeah.
Now, I think we all have to ask, how reasonable is that? That
Yeah.
is any one firm going to be able to capture that? Or to your point, going back to our earlier conversation, if all of these large language models, and they are all large language models, are training off of these very similar pools of data and are being used by the same chunks of people to do the same tasks, are people going to want to pay a premium
Right.
for anyone? Or conversely, are we going to end up with these AI bots and AI agents being treated more as a software as a service, being
Hmm.
added into existing infrastructure? And I don't know sort of where that conversation is going to end up, but I would say that AI, and I'm sure that your audience can, I think, go online and pull up any charts about NVIDIA and OpenAI
Yeah.
and Apple and investing into each other. So there is that aspect of it too. I do think that it's an industry that is going to take a ton of capital to ramp up to get it even close to their forecasts. I don't think we are going to hit that.
Yeah.
And I think we are entering a tiny bit of a kind of bubbly phase. I wouldn't call it the AI bubble,
Right.
because AI has some real promise and it's being used to do real things. But I do think the valuations and the forecasts are getting a little ahead of the realities right now.
Yeah, it's very interesting times. All right, this has been awesome, Sean. Once again, I appreciate you coming on the show here. Is there anything else that you want to share with the audience before we end here?
Yeah, all that I would say there is that I'm very easy to find on social media. I'm at Sean Stein Smith everywhere, and also be on the lookout. I have a whole new book coming out in Q1
Ah,
2026 on these
cool.
topics and more.
What's the name of the book?
You know, Rory, I have to admit I cannot think of the exact title right now,
That's
but
okay.
it is coming out Q1 26.
Yeah, I know you write a lot here, Sean. You're all over the place, so I'm thankful that you came on the show. You're only you and Donnie Shimomoto are the three-time guests here that have been on the show. So I appreciate you coming on. I can't wait to have you on again in the future.
All right, Rory, thank you so much again, my friend.
Thank you, Eddie.
All right.
Opinions expressed by Rory Henry on this website, podcast, interview are solely their opinions and do not reflect the opinions of Arrowroot Family Office LLC or their parent company or affiliates, and may have been previously disseminated on television, radio, internet, or another medium. You should not treat any opinion expressed by anyone as a specific inducement to make a particular investment or follow a particular strategy, but only as an expression of their opinions. Past performance is not indicative of future results.